Earnings season is in full swing, and a couple of less than exciting reports brought the market down this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to this week's Elite webinar. Now, if you are watching this on YouTube and you haven't done so already, do me a major solid, hit that like and subscribe button, hit the bell icon right next to it to get notified every time we upload a new webinar because, man, the market is moving right now and there's no denying that. So, we've got Riz here this evening with us. Riz, how you doing?
Doing good, Chris. Yourself?
I am doing great. So glad to have you back again. It was great having you last week, and I'm definitely looking forward to hearing your insight on this week. But yeah, last week we kind of told you there was going to be some big earnings announcements this week, and we were definitely not disappointed with that, especially on Wednesday. Now, there were a couple of big names that reported on Wednesday, specifically in the tech sector, that kind of dragged the market down, and we had a very big, selling day on Wednesday. Definitely a little bit of, well, if you're into chart patterns, that looks like a bottoming hammer to me. But definitely a little more selling on Thursday. And then Friday, we had some economic data came out, kind of helped push the market back up. But man, Riz, volatility in the market seems to be back, if you ask me, especially with these earnings results.
Yes, volatility is definitely back. We're, in the thick of Q3, which is pretty hard to believe, but here we are, in the midst of summer. It's really everything going on in the earnings side data, plus we have the big question mark of the political spectrum and the goings on in the US, right? So I assure you those things play a factor in some way because I think the market's trying to price in who might win, who has the best odds, and those keep changing. A lot keeps changing, right? Week by week. Um, and of course we have that big question mark of all the fraud and the crazy hype in anything and everything semiconductors due to AI and whatnot. So because of that little pullback, I would say in some of the semiconductor names, it's actually had a significant impact on uh, tech as a whole, but specifically if we look at the Nasdaq. So Chris, if you bring up and yeah, no, you can bring up QQQ. Yeah, that's fine. Okay, so if you take a look at QQQ, you'll see that it's down roughly from the highs about 10% almost, Chris, if we uh check that, roughly about 8%. So we're getting into, remember, 10% is official correction territory, right? And that's where we're kind of trending. Uh, so very interesting to see the Nasdaq. Okay, remember the entire Nasdaq, kind of getting close there to correction territory. The S&P 500 obviously holding up um, a bit better. With roughly, let's see here, about 3.5, 3.6% from the high. So honestly, not much of a pullback in the grand scheme of things, right? So there is that kind of differentiation between the two indexes. All right. We continue to be in earnings season. This coming week is another packed schedule. We have a bunch of names that I'm sure we will touch on, Chris, in the later part of the webinar.
Oh, you know it. I've got that earnings calendar ready to go. But let's continue here. Kind of take a look down at that breakdown for the S&P 500 to see what is going on. And, we kind of talked about it. Tech and communications making a real big pullback here. Ever since about the beginning of July, honestly, we've really kind of been pulling back quite a bit. A little bit of a rebound on Friday, not too surprising with the market kind of bouncing back up, getting that sympathy move in tech back up. But those sectors that are looking really good right now. Financials has had a big move up. They reported earnings, I believe it was a week and a half, 2 weeks ago. And that was definitely kind of helped push that sector towards the upside, really holding basically right with the S&P 500 at this point, up almost 15%, while the SPY ETF representing the SPX here up 15.31%. So, very big move in financials there. We did last week, we saw a lot of these indices here just kind of holding together, and we've seen a bit of a dip here, especially with consumer discretionary, really kind of taken a dive this week. With those earnings coming in, and of course, probably somewhat of a sympathy move towards tech. Real estate pulling back up there, basically holding right around zero, but utilities, energy, healthcare, and consumer staples really just kind of holding steady right between 7.25% and 10%, essentially. So, yeah, what we were talking about, Riz, that big pullback in tech is really starting to pull the market down with it, even though some of these other sectors are starting to perk back up a little bit.
Yeah, not surprising. We speak about rotation. We can see that kind of at play here, right? With real estate, nothing too substantive. We got utilities, energy, healthcare also doing really well, kind of picking up. But obviously at the close, we did have a green update, right, on Friday. So you can see that kind of pickup in all the sectors on Friday. So I think not too much to be gleaned by Friday, but coming into, Thursday, you can see that even then, some of these sectors like utilities, as I said, energy and healthcare, um, even consumer staples, just holding in there as compared to things like communications and tech, right? So be mindful of that. I've been telling people once again to be careful of their exposure to any individual sectors, especially tech and in the semiconductor space.
Yeah, it definitely seems incredibly volatile right now, especially while, like you're talking about with, that sector rotation, people moving out of tech and into other sectors, such as at least looks like financials here, utilities looks like they're starting to get picking back up a little bit. Definitely a lot of movement there. So make sure you're keeping an eye on that and keeping your positions, uh, you know, scaled properly, is the best way I could say. All right, let's take a look here at the asset classes. And we've got oil on the move. We were really holding this line really nice. We dipped below in May, came back up, touched it here in the beginning of July, and we haven't come back since. So definitely some resistance there on oil holding right below about, what is that, about $80 a barrel, 84, let's say. And then closing the week, let's see, $77.16 per barrel for light crude. So holding right on this 76 support line that we've had, here for quite some time. So really holding that area going into the weekend. Now, gold went a little bit nuts last week. We made a new all-time high on gold here at, let's see, it looks like $2,458.06 per ounce. That's pretty crazy. But saw a sharp pullback after that. And we definitely had a bit more of a consolidation week here for gold. Of course, we came down from that all-time high from, previous Tuesday, and kind of came right back down here below the previous all-time high, right around $2,425 per ounce, and seem to be basically holding in that zone there. This seems to be the range that gold wants to trade in right now. Yes, we did breach it, but we came right back in. So nothing too exciting there with that. But yeah, oil holding steady here, Riz. Gold kind of coming back down. What are your thoughts as far as the commodities are concerned?
Yeah, I think gold can continue to hold here. Again, obviously, I'm not a buyer. I haven't been a buyer. It's just to me a bit too much of a reach at this point now. But it can definitely hold these levels because as we see, uh, macro data come in, as we see potential rate cuts coming in, we can assume that, prices of gold will stay here as a hedge, as a safe haven, especially for the uncertainty all around the elections, right? With oil, the fact that, we've seen that it's kind of trending slightly down, especially bouncing, not bouncing, but hitting up against that trend line there and then rejecting it and coming back down to 76. I think that's um, I think 75 I would not be surprised we see that 75 area kind of touch point again, with everything going on. I think, pretty stable, all things considered. It's not the massive price swings that we used to see back in 2021 and 2020 or even 2022. So pretty muted price action in terms of for a commodity like oil. But it's definitely in the realm of normalcy here.
Yeah, and I think that's really interesting, especially with everything going on in the Middle East right now, all the tensions out there. You listen to any doom and gloomer here on YouTube, and they're telling you the oil is going to $200 a barrel, and I just kind of laugh every time I hear that. But still, it is interesting that oil has really held steady here and not, really seen a lot of gains this year as far as, uh, where we were before. I mean, we look at the beginning of the year here, we started at about $70 a barrel and we're only here at about 76, 77 right now at the close of Friday. So not a huge move in oil, and really kind of, holding steady, like you said, despite all of the, international, turmoil right now. So, all right, let's keep going. Let's take a look here at the bond yields and the US dollar. We'll start with the US dollar because there's really not much to report here. Dollar holding steady here really has been tight around this 103, 104 area for quite some time. Looks like about April, we've been kind of stuck between there and 106. So very range bound right now, basically just consolidating. No major moves like we've seen in the past, which is, again, somewhat surprising. As Riz has alluded to several times, we do have an election this year. We might expect some more volatility. But that being said, the US dollar still remains the world reserve currency and is still holding strong. So that is definitely a good thing for the dollar. Now, I think the more interesting thing here is the bond yields because we are starting to see a very defined, slow downturn in the bond yields here going into what could be potential rate cuts here within the next couple months. And we talked about this last week about the bond yields somewhat pricing in those rate cuts, and that trend seems to be holding pretty steady so far. Do you have anything else to add to that, Riz?
Yeah, I think you touched on it. I think pretty normal as we continue to see that pressure towards potential rate cuts coming in closer and closer, right? How many we may get obviously is all conjecture, but I think the odds are definitely looking like we're gonna get at least one. Um, so the I think that's definitely the case. I think maybe we see that September. Um, we know Canada already last week did their rate cut. It's their second 25
Okay.
basis point rate cut. So if you think about it, Canada is ahead of the curve by 50 basis points already in their rate cuts. And it'll be interesting to see how the US reacts to this. Because I remember we touched before that they have moved in tandem in the past. Obviously, right now that's kind of diverged, but it will be interesting to see.
Yes, obviously we're using the Canadians as a leading indicator here. So we're just kind of watching, waiting, see how our friends to the north handle things before we make a shot here down on the southern part of the continent. But let's get moving into the key dates in the market. And if you're here on the live webinar, go ahead and start putting your questions in the chat. But we've got some dates to keep an eye on this week. Now, of course, there's a big earnings calendar this week. We'll go through that in just a second, but let's take a look here. We've got job openings being reported on Tuesday for the month of June, so that'll be an interesting one to keep an eye on. But more importantly is going to be Wednesday, which is the Fed rate decision and the press conference. Now, I don't think there's going to be, like Riz said, I will be flabbergasted if they drop rates this time around. I think the markets would be kind of flabbergasted as well because all indications are pointing towards September at this point. And I can't see them doing it just yet. But stranger things have happened. So keep an eye on that. But I think more the press conference, how investors take towards what Powell's saying, what they hear, whether he's hawkish, whether he's dovish, will be more of a mover for the market than them saying, well, we're going to hold rates where they are. Because, I mean, I feel like we're kind of used to that at this point. Moving on in the week, Thursday, manufacturing PMI. Nobody's going to be caring about that. Friday, we've got the unemployment rate and the non-farm payrolls. That's going to be a big one. That has always been a mover of the market, especially if it's a large move in a direction that they were not expecting. But right now, it looks like they're forecasting that it's going to hold steady here about 4.1%. But yeah, I think honestly, if you had days to keep an eye on the market, Wednesday and Friday look like the big days to me. What do you think, Riz?
Yeah, I agree. Not too many betters here on a rate cut just yet for August. Like you said, job openings are key. But Wednesday, everyone will be paying attention at 2 p.m. and 2:30 for Powell's remarks. Payrolls again and unemployment rate will be important on Friday. I'm not too concerned with manufacturing PMI, and I don't think the market is either.
Yep. Absolutely agree with you 100% there. Now let's get to the fun stuff. Let's take a look at the earnings calendar because boy, we've got some names today. Let's see. Monday, Mickey D is reporting before the open. That's going to be the big one. I think that's going to be keeping an eye on things. As I say, if you smoke them, got them. Tilray. Not that I think anybody here is going to be playing that, but it's there just in case you were interested. We got a couple on Tuesday to keep an eye on. We got Sophie, we got PayPal, a big name there. If you're looking at oil companies, BP is going to be reporting pharma. We got, Pfizer, P&G, Corning, all reporting. Merck reporting as well. So a lot of big pharma reporting on Tuesday. But then after the close, then we get the big names. We got AMD and we got Microsoft, two massive names here that are going to be making an impact on Wednesday and definitely in after hours trading. So be ready for that. If you want your pumpkin spice latte, we better be getting into Starbucks. No, I'm not suggesting you do that, but Starbucks is reporting Tuesday after the close. So if you hold, be definitely aware of that. Moving into Wednesday, Boeing, definitely the big name going to be reporting there, along with some others. Kraft Heinz, definitely a consumer staple, as they would say. Altria, well, like light them up, as they say. And then we've got some credit cards coming in. We got MasterCard reporting and some others. After the close, big name is going to be Meta. Meta, aka Facebook, going to be the big name there. We also got Qualcomm, also another big name, but everybody's going to be watching Meta. That's going to be the big mover going into Thursday. More pharma names. Moderna is going to be reporting. Everybody loves their plastic shoes, so make sure you're looking at Crocs. And then after the close, seems like all the big names for the most part after the close because we got Amazon, Apple, Intel, big names. Intel not as big a player as it used to be, but definitely Amazon and Apple, 100% going to be moving things into Friday. And then Friday looks like we got some oil companies, Exxon, Chevron, and that looks to be about it. Enbridge is down here as well. I know that's one that Riz likes to keep an eye on, and we get questions about that several times, I feel like, every month. But yeah, other than Canada Goose, Riz, what else are you going to be watching? Is that about cover it?
Yeah, you about hit the nail on the head. Sorry, might have dozed off.
Yeah,
Some,
right.
but what I realized or what I didn't can't remember. Maybe you mentioned it. The flying coffin company that comes around every 3 months. Boeing. They report when it's
Yep,
closed. You probably mentioned it, right?
I
Uh,
did. Yeah,
yeah. So they're still flying, which is a miracle.
crazy. And I mean, they got roasted in the Senate hearing as well, at least from the parts that I listened to, absolutely just lambasted. But yet the company is still going. Boeing, I mean, if you're holding, let's hope it doesn't crash. But I would bet on crash more than safe landing, if you ask me.
Yeah, Boeing is still going. That's the way I say it. But
Crazy.
yeah, you nailed the head on. Everything. Yeah, I think you're right. Uh, this is more of an interesting earnings week, definitely more so than last week. I think this is like the peak earnings
Oh yeah.
season. So I hope everyone kind of ready, prepared. Um, I usually like to trade post earnings. So like
Hmm.
I don't like to trade in a name before earnings or just before earnings are released because it's like we've said many times before, it's pretty much a gamble. It's a coin toss, right? Earnings are a coin toss, and not only that, how the market reacts to the earnings, the guidance, that's also a toss up. Do I prefer to trade post earnings if there's an opportunity, right? So that's something a lot of elite members will have noticed by now, because there definitely are times where you'll see opportunities shape up post earnings, and I think hopefully maybe we see that happen this time too.
Yeah, I mean that earnings can just be so volatile. Let's take a look here actually at Tesla real quick before we get in there because that was one of the big names that reported on Wednesday that really just dragged the market down with it. And it's one of those things you can't necessarily predict what's going to happen. Now, obviously, it was a pretty big miss. I mean, let's not kid ourselves. Pretty big miss here on EPS, about 15%. So that's not nothing. Revenues were looking good, but after this huge run up, after their delivery numbers were so good. I have my little helper who's going to come here and join me. And so, their delivery numbers look great. It shot the stock back up, and then earnings just absolutely crushed it, kind of coming back down here and pulling the whole market with it, for lack of a better term. So, I mean, if you were thinking that it was just going to go up and up and up and continue to go up and up forever, earnings could definitely bring you back down to earth. So, like Riz was saying, it's one of those things where it's like maybe it's just better to wait on the sidelines, let earnings hash out, kind of see where things end up, look at guidance, the EPS revenues, and then kind of see what happens. And maybe that will give you an opportunity to get in if you feel that the company is worth it. And speaking of companies reporting before earnings here, Sean would like us to take a look at McDonald's. All right, let's take a look at that Big Mac. All right. What are our thoughts about McDonald's going into earnings? He says he's planning to hold his common shares, but curious of our thoughts overall. Seems like the $5 value meals are McLovin it. There you go. We got to get that McLovin in there. So McDonald's here, from a technical standpoint, definitely in a very solid downtrend here since about February of this year. Obviously, they weren't McLoving it so much then. But we are kind of coming into earnings. Looks like last earnings we missed a little bit, not by much. They did dip down, but it was bought right back up into some more sellings into here. Ex dividend, very nice ex dividend there if you're holding those shares. But definitely holding this 246 area seems to be very strong here. But of course, earnings, no one cares about technical support levels on earnings. But Riz, what are your thoughts on McDonald's here going in? Obviously, discount food, vendor, for lack of a better term, fast food. Looks like we're definitely kind of coming into that position here where we're sitting on resistance or support, excuse me. What are your thoughts?
Yeah, no, great question. Great structured question, Sean. But I think you hit the nail on the head once again. You're on point. Chris, as usual, I feel like this is definitely one that we are comfortable holding. In fact, I have a position. So Sean, you planning on going into earnings while holding? Ditto. I am doing the same. I think this new value meal, the $5 meal thing is definitely big. The fact that we're talking about this on the webinar, and I've heard talk about this in Elite and even outside of Elite with others, tells me that this is, something that's here to stay. It's a value add. It's, quote, no pun intended. It's definitely something that resonating with consumers, and I think and I think now more than ever in the times we live in, it's important because
Oh yeah.
in a time where unaffordability is very high and there's a massive divide between those that have and those that don't. Um, but without getting into the philosophical aspect of it all, I would say that this is a net positive, and I think they're going to definitely talk about it. I think it's going to be something that we'll hear from management saying that it's had a good effect on their numbers and also a good impact, positive impact on consumers. Remember, it's not all about the bottom line. I think companies are realizing this or will continue to realize this slowly but surely that it's not all about the bottom line. Case in point, our resident flying coffin company, Boeing, right? If you focus solely on bottom line, everything on bottom line, everything on the net numbers and revenues, you lose the soul, you lose, if for a lack of a better word, what the company is. And Boeing, from being that leader, that innovator, like I'm a big I love aviation and stuff, but I mean I wouldn't say I'm like a diehard, but I do, resonate with aviation and things like that. And Boeing used to be the leader, the best. Like, we have so many of their tech and planes and not only just commercial and civilian aircrafts, but like military stuff, right? They were at the top echelon of what they were doing. And it's sad to see it's not the case, right? So we see, and that's for many reasons. It's not just solely to try and drive revenue and value, which is fine. But if you go too far and you have bad management, you have bad ethos, you have bad, I don't want to say bad, but like, I mean, like you have something that just is too focused on the granular, you miss the bigger picture. And I think that's what's been happening with Boeing for years. Remember, these things don't happen in days or weeks. They happen or months. They take years and years to unfold the lapses, the shortcomings, and the mistakes. And then it may take years, if ever, to even rectify them. Right? We don't know if they're even going to rectify them or will be able to, right? They already got sued by the regulator, by the US. They already had to take a charge. They already are going through that. Like these are all things that start knocking on your doorstep, not to mention obviously the negative brand impact when you have parts coming off midair, even before taking off. You have obviously debts, right? Like what's worse than that than people dying using your product or service? That as worse as it gets. So it's a shame, but hey, the fact that it's still holding up here above 180 is honestly a miracle. It's a miracle. But yeah, it's kind of common. I've heard people are saying like, when they travel now, long haul, they look at what airline
Oh yeah.
company it is. Is it Boeing or Airbus? Mostly it's just Boeing because especially in North American flights, transcontinental, if you're leaving from here, you will most likely be taking a Boeing. Um, People are like, damn it, I hope I make it,
Yeah, right.
which is not the way you want to be going on vacation with
No,
your
it's not.
family. Sorry, I just found that funny, but it's actually not. But it's just sad. It's all levels of sad. Yeah, right now. So like Sean, I reading your message. Yeah, absolutely, man. There's a lot of people resonate with that. I haven't traveled for some time, but the last time I did look. Even then, I mean, it was a year and plus ago. Uh, and I was just like, fuck, all right, man. Coffin
For the
time.
best.
Coffin time it is. It reminds me of that. Remember that meme, that video meme back in 2021, 2020, I don't know. Remember where there's a coffin and you have a bunch of like Nigerian, I think it's like a Nigerian custom where they were just maybe doing like a ceremony or something and they're holding that coffin on their shoulders, all the guys, and they're
Oh yeah,
dancing.
yeah, yeah.
You know what I'm talking about?
Yep, I know
Uh,
what you're talking about.
that's that's Boeing pretty much.
It really is. And you're so right about it. Riz, when you're pushing just for revenue and pushing for the bottom line and forget what the soul of the company really is, and what it has done in the past. It's one of those fundamental things that you don't see on a balance sheet, right? you,
Yep.
you don't see that on an income statement. And that's something that's deeper, and fundamental to the company, and something that they've lost. And it's just really unfortunate what's been happening with Boeing. Sean is asking, does Airbus just take the market share that Boeing is likely losing to this incompetence? What are your thoughts on that, Riz?
Yeah, yeah, definitely. I think there's been that, but the problem is like I think it's a problem of scale, right? There are
Hmm.
very few scale, they can only produce so much. And when companies buy, they're not buying like five airlines and then they're gonna replace them next year. No, they're making this investment for the next 5, 10 years and longer. And not only that, even from a servicing standpoint. So even if if companies, airlines want to switch over from Boeing products to Airbus, because they already have the airlines, there can't just you can't just go on, Craigslist or Auto Trader and just list up your 747, 787, right? You can't do that. So they're stuck with them. Now the question is, will they have enough incentive and reason to just make that switch over? But that's why you see it switch over slowly. Contracts, longer delivery times, like Sean is saying. Definitely, it's a slow game, but uh, we're hoping. I think just not only for Boeing as a company, but just from a safety standpoint for travel, that they can turn it around, that they can
Yeah.
make it more safer and more like confidence inspiring. A lot of it is just confidence. We're not the pilots flying the aircraft. We are sitting there at the mercy of the engineering, of the pilots, of the elements early, and people need confidence. So they're still going to travel, but it's about that added layer of safety, and like you said, it's not all about the bottom line. I can, as a business owner, as an entrepreneur for many years, I can tell you, Chris, you know this. It's not the way I run our business, the way I run things. It's not just about the bottom line. Even in trading,
Oh yeah.
if I'm not out there trying to squeeze every last little bit, because to do that has a cost, has a price. So, uh, I think I resonate with that a lot, and how I live my life, how I approach trading, and how I approach business.
100%, 100%. Thank you for that insight. Now, I did get a question through Discord from one of our elite members. Wanted us to go ahead and take a look at CRWD. This should be a name everybody's familiar with right now. Obviously, the worldwide update didn't go so hot here back a week ago, last Friday. And so Larry's saying, "Hey, I hope you're having a great weekend." Thank you, Larry. I hope you're having a great weekend too, brother. Glad you sent this question to us so we could take a look at it. Just want to take a look at CRWD. Obviously, he's holding with it along with Riz, and wanted to get some additional insight. Wanted to know if it's going to hold up here, as far as our thoughts, or if it's going to continue to bleed. Now, obviously, we seem to have kind of held up here, uh, you know, going into Friday. Now, obviously, the market was green on Friday and this was red, but that's kind of true with a lot of tech names, to be honest with you. Even though there was a little bit of a bump in tech, a lot of tech names were still red on Friday, even though the market pushed up pretty nicely. And as always, somebody's calling me in the middle of a webinar. It always happens that way. But definitely, starting to kind of see a little bit of a curl here on CrowdStrike. Of course, obviously, this bleed down here on Monday was not ideal for our position. But Riz, what are you thinking? Do you think we're going to hold up here around this 250 area? Obviously, that's a pretty big area for psychological support.
Yeah, yeah, definitely. I think again, obviously, there's no guarantees,
Oh, of course not.
but that outage definitely did a lot of damage, not only from a operational standpoint, but obviously for their company and their and I would say the kind of the positive I would say the positive kind of reputation, right?
Hmm.
Perception is important.
Oh, yeah.
But yeah, all in all, it was rectified relatively quickly. Obviously, it's never quick enough, but it definitely was rectified relatively quickly. But obviously, by then the damage had been done. People had been stalled in travel, everything, right? So, but I tell people, and I had a conversation about this with another elite member, and I said, yeah, it was bad. It was a mess up. They fixed it. They addressed it. The way they addressed it afterwards with that gift card, Uber Eats gift card, was also a slap in the face. I don't know who approved that. I wouldn't even do that. Like if we, if something, there's nothing ever goes wrong, but like, if something ever happened, I would not be comfortable giving a fucking $10 gift card or some shit. That's what it was. I think it was like $10 or something, bro.
Wow. You can get two of those McDonald's $5 value meals for that.
Yeah, like it it's brutal. Like actually probably not, Chris, because after when you order from Uber Eats, like after the
Got the
delivery,
delivery,
it's like
delivery,
one $5 for the value meal and then $5 for all the other service charges and
and the
all.
tip and
So
everything
you
like
can
that.
actually
So
probably
yeah,
get
you get
one
one.
value. But I feel like it's such another mess up after. I don't know who does this. I don't know if like for such large companies with so many people, I just don't understand how these stupid decisions are made. And but I think that's actually part and parcel with having such a large company, so many people, yada yada. Whereas when you're smaller, you're lean, you're agile. And but continuing on, I think this definitely is hopefully going to look like it's going to hold here. I think their client list, as we saw on Friday, is pretty good, right? I don't think
Yeah.
they're going to be people are going to be switching over, due to contracts and um, but I think their client list is pretty good. What we realized, after that outage was, damn, they got a bunch of airlines. They got Microsoft. They got, you know, pretty much the almost the entirety or large chunk of the internet infrastructure,
Hmm.
um, with as their customers. So just solely based on that, I think we are in a good spot. Can it go a little bit lower? Sure, especially if markets turn lower. Yes, I do think that most of the damage has been done though.
Yeah. Yeah, I have to agree. I think they've suffered enough. We'll see, as we go into the week here. And obviously, of course, earnings on some of these big names will help with that. And that is a great segue into our next question from Mr. Dylan Nasdaq, Dylan QQQ, asking our thoughts on Apple and Microsoft. All right, let's take a look at the big one first. Let's look at Apple. Apple, of course, suffering here from that rollover in tech that we've been seeing since about the middle of July. So Apple kind of coming back down here, coming back a little bit towards earth, if you ask me, a little bit more towards reasonableness, towards normalcy, or something. You can put an adjective in there that you like, but Apple kind of coming back down here. Let's see what's the projections. About $1.34 a share. We'll round it up for simplicity's sake, and a revenue of a paltry $84 billion. Definitely some big numbers there. Let's see how that compares to last time. Right around the same there. So just maybe a tad less. So I mean, going in, like we talked about, going in, it's a coin flip, on how this reacts. And it's one of those things it's really frustrating, right? Especially if you get it right. Let's like say, okay, yeah, they nailed earnings right here back in, February this year, and they didn't do jack squat. They actually kind of dipped back down here. So if you went in, long on this and you got shaken out on this dip here post earnings, uh, you could have been right on your call with earnings, but you didn't get any type of reward for it. So it's a very difficult thing to predict. But Riz, what are your thoughts here on Apple going into earnings? I mean, do you think they're going to hold up here, or do you think it's time to kind of come back down more towards earth?
Yeah, I think it has a bit more room to go lower. Again, obviously earnings are anything goes, but I do think even apart from earnings, let's just assume they don't have earnings this week or anytime in this near future, I would still be hesitant to buy here, simply because of the massive run up it had last month, right? I feel like we need to see it around 208, the 200-day moving average, sorry, the 50-day moving average, for me to even consider it. And that too with the backdrop of the market. Remember, I don't solely buy or trade anything just based on a fisheye lens of just one thing. I factor in multiple variables and I take a very holistic approach. I look at everything. That's, you know, experience and time and strategy and discipline talking. So I would not be comfortable placing a trade on it for earnings. But even if earnings weren't a factor, I would not be buying. I also wouldn't be shorting it. I don't want to short Apple, of all things. So
Yeah, no
it,
kidding.
yeah, I'd rather just sit this out, wait, watch. It will get more interesting if it can get to that 20, 210, 208 area, the 50-day moving average, and then I might consider something because you can see that touch point at 208, kind of held up last and it bounced up from there. So let's see if that can happen again.
Yeah, that'll be very interesting if we can get kind of a bit of a pullback there on Apple. All right, let's take a look at their competition. Let's take a look at good old Microsoft. So Microsoft here definitely coming down, kind of mirroring Apple a little bit. I'm not going to say 100% because we did see kind of like this rebound here that we didn't really get in Apple, and then another pullback down. So Microsoft is pulled down below the 50 moving average there. Definitely holding in this space between the 50 and the 200. Saw a nice day on Friday. Nice little bounce back up that we didn't see in, things like Apple or Tesla or things like that for the most part. But yeah, it looks like earnings here, they're expecting about 64 billion, 2.93 per share. So, definitely decent numbers that they are expecting. Looks like that's basically right about in line with what they, reported last time. So basically a hold on earnings is what they're expecting. Look like we're approaching the, the oversold area here on the RSI, but of course, we know earnings doesn't care about that. So, with Microsoft, Riz, what are your thoughts here? Anything different than Apple?
No, it's same thing,
Yeah.
except this time I'd like to see it maybe get to 400. Maybe it never does. Maybe that's a reach perhaps because, they're a stellar company. I just like to have more margin of safety baked in. I'd like to have more of a cushion. I'm not in a rush, especially with the current market backdrop, with tech, you know, not tech, but like Nasdaq being down roughly 8%. I think, maybe what if it gets to that 10% pullback area, right? Not the most confidence inspiring time to be buying tech, especially if we assume that there's a rotation out of tech into other sectors.
A very solid, fair point, and definitely one to consider going in. So that looks like about it as far as the questions are concerned. Of course, I want to thank all of our elite members for coming out. Really appreciate each and every one of you, and especially you, Riz, for making the time in your schedule to come out and talk with us. It's always a blessing to have you here on the program and to give us your insight because we live in a very volatile time right now. As you said, we've got an election coming up, potential rate cuts. International conflict seems to be the flavor of the month or the flavor of the year, as it may be. Just a lot of things going on that can really affect the market. And it's good to have an unbiased opinion out there to kind of give you the straight answer as opposed to basically just telling you what you want to hear. So thank you for giving us that, Riz. I really appreciate it.
The pleasure is mine. Again, thanks for hosting, having us on, and having everyone here. And I appreciate, again, as Chris said, people being on and showing their support, and of course, being part of Elite.
Definitely great to have all of our elite members, all of our elite family. We love you, whether you're here on the live webinar or whether you catch it on the replay. Thanks, everybody. Have a great weekend, and we'll see you in the market on Monday.